come to question number, I think this is question number 68. Question number 68. Super expected must revise question. Can we read? On 1st April 2001, Sun Limited guaranteed a 10 lakh loan of subsidiary. Sun Limited guarantee a 10 lakh loan of subsidiary Moon Limited, which Bank STDK has provided to Moon Limited for a 3 year at 8%. So 8% is the rate of interest with guarantee, without guarantee? With guarantee. Interest payments are made at the end of each year and the principal is repaid at the end of loan term. If the Sun Limited has not issued guarantee, bank would have charged Moon Limited at an interest rate of 11%. Understood why it is given? To find out the fair value of guarantee. Sun Limited does not charge Moon Limited for providing the guarantee. Suppose they have charged some amount, some nominal amount. Correct now. Then can I say, suppose the fair value of guarantee is rupees 1 lakh and they have charged 30,000. So difference will become what? 1 lakh minus 30,000, 70,000 will become investment. Got it? Then generate into bank account, investment account to finance a guarantee. Correct? But in exam they will not ask this type of questions. Correct? But I hope you are understanding whatever I am saying. Understood? Correct? Yes, sir. Remove it. On 31st March 2002, there is 1% probability. Oh, achha, why they have given this? To find out loss allowance. 1% probability that Moon Limited may default on the loan in next 12 months. This 12 months this year. 1% probability. 1% probability. If the Moon Limited default on the loan, Sun Limited does not expect to recover any amount from Moon Limited, of course. If Sun Limited will recover, then why is the guarantee? Correct now. So of course they are not expecting to recover any amount from Moon Limited. However, they may recover also. Correct now. On 31st March 2003, means next year. Correct. There is a 3% probability that Moon Limited may default on the loan in the next 12 months. If Moon Limited default on the loan, Sun Limited does not expect to recover any amount from Moon Limited. This is also given to find out loss allowance next year. Provide the accounting treatment of financial guarantee as per Ind AS 109 in the books of Sun Limited on initial and subsequent recognition. Correct. Good question. Can we do this? So we are doing question number 68. Write down. As on initial recognition, that is, what is the date? 1/4. Financial guarantee contract will be initially recognized at its fair value which is calculated as under. Correct. Year end 31st March 2002, 3, 4. Contractual, or better, don't write down contractual, write down cash outflow. First at 12% or 11%? What? 11%, no? Without guarantee 11%, 12%. So cash outflow at 11%. So it will be what? 1,10,000, 1,10,000, 1,10,000 plus what? What is the principal amount? 10 lakh. And contractual cash outflow means cash outflow, better write down, at 8%, that is 80,000, 80,000 and 10 lakh 80,000. Difference, it is 30,000, 30,000, 30,000. Can you give me present value at what rate? But the present value at what rate? At 11%, at 8%, 3%. Present value at what rate? Apply your common sense. Suppose we have not discussed in class, in exam you need to do. Either you will take 11% or 8% difference of Mahabakwas. Why you are saying difference, right? Difference सुना लेंगे. Correct. It will be at 11% na. 11%, because we are calculating fair value of guarantee given, means at market rate of interest from whose point of view? From subsidiary's point of view. Correct na. So at 11%. Can you give me the present value? How much? 73,320 I am taking. Okay. The fair value of what? Guarantee. Correct. Therefore, what journal entry will do on 1/4/2001? Investment in subsidiary account debit to what? Financial guarantee obligation or liability, whatever you want to write down. Liability. 73,320. 73,320. Got it? Simple. Now, then down. Subsequent recognition. You can subsequently financial guarantee will be recognized at higher of. Point number A, the amount of loss allowance, or point number B, amortized cost of financial liability. Correct? Understood? Now first let us calculate one amortized cost table. Correct now? Madam. Calculation of amortized cost at each reporting date. At each reporting date. Year end 31st March. It is what? 2002, 3, 4. Correct? Opening liability is what? 73,320. Interest by applying EIR. What will be EIR? 11% only. Correct? Yes, sir. Understood? Then, let us benefit provided. Just write down benefit provided. I will explain. This will be closing liability. So, can you give me interest at a rate of 11% first year? 8065. Correct? Now, can I say, just try to understand. Benefit provided means what? If default, if there is a default, understood? So, who will pay? Parent will pay to the bank. Correct? And for this purpose, guarantee has been given. So, what is the benefit provided to subsidiary? Benefit provided to subsidiary is the differential cash flow. Differential cash flow. So, what is the differential cash flow for the first year? That is 30,000. So, this will be 30,000. This will be deducted. So, this is plus, this is minus. So, benefit provided will be considered as cash outflow. Cash outflow. Understood? Correct? So, benefit provided, right on. How much is the amortized cost? 51385. Then 51385. What is the interest? 5652. Then once again 30,000. Then become 27037. Then 27037. Last year take it as balancing figure 2963. So the benefit provided is the differential cash outflow. Got it? So we have calculated amortized cost. Now we'll find out the carrying amount as on as on the end of first year, as on the end of second year, because they have asked this year and this year. Correct? Right on as on 31st March 2002. So can is a financial guarantee will be recognized and measured at higher of Point number A is what? Loss allowance. Amount of loss allowance. So loss allowance they have given 1%. 1% of 10 lakh. 1% of 10 lakh na. 1% of 10 lakh. Got it? That is coming what? 10,000. 10,000. And B is what? Amortized cost. Amortized cost as on the end of this year only, that is 51385. 51385. Therefore, we'll take subsequent measurement at what? Higher of these two. Means can I say it will be subsequently measured at 51385. What is the initial, or you can say what is the opening balance? What is the opening balance? Is what? 73,320. It means liability will decrease by how much? So it will be adjusted in what? Adjusted in PL. How much? Difference of these two? 21935. Understood? Have you understood this point? Means what journal entry will do? Our financial obligation will decrease and transfer to PL. So what journal entry you will do? Financial guarantee liability account debit to PL. That is 21935. 21935. Means we are not passing any separate journal entry for interest and benefit provided. Means we are not doing any journal entry for this. We are doing a net journal entry with the difference between the closing balance and opening balance. Automatically, can I say it will be adjusted through PL? Got it? Have you understood this? Correct. Now let us do for what? As on 31st March 2003. Same thing will do. It will be measured at higher of point number A, loss allowance. Loss allowance, how much percent they have given? 3% of 10 lakh, that is 30,000. And what is the amortized cost as on this date? Already we calculated, that is 27037. Correct? So we'll take higher. What is higher? 30,000. Correct? Then we'll compare with opening balance. What is the opening balance? Opening balance is now what? 51385. So opening balance is 51385. Understood? Correct. So once again liability decreases. So it will be adjusted through what? Adjusted in PL. How much? 21385. What journal entry you will do? Financial guarantee liability account debit to PL, that is 21385. 21385. Understood? Very simple, but if you retain, this question will come for 10 marks, not less than that. And you can score 10 out of 10 if you can retain the concept in exam hall. The point is that can you accumulate all accumulated point, can you retain? For that, consistent revision is required. Consistent revision does not mean revise every day, but you need to just refer the concept at some point of time. I hope you understood.